Greece is cutting public sector pay, raising taxes on the wealthy, taxing the church, freezing pensions. Not much left beyond this. Is this going to work?
Is it going to be enough? Well, that will also depend to some extent how the Greek economy will improve. Will Greece regain competitiveness? And that's really the long-run issue here, whether this crisis will perpetuate itself and or whether we're going to have an improved competitiveness. Slashing just public sector pensions might in this respect not be enough in the long run. What you need to have is more competitiveness of the private sector. So, but over this issue, the government has relatively little leverage. It cannot just decrease private wages as would happen in a currency devaluation. And there are two options here, basically, that are open to the European leaders. One would be to directly guarantee and intervene in the bond market, make sure that Greece does not default. This is option number one. The second option would be to allow, possibly, for a debt moratorium on Greece's debt, and then only content itself with managing the consequences of that.
What impact is this having on the euro? There were some articles in the paper recently that said hedge funds were betting heavily against the euro, and we certainly saw it go to 9-month lows. Now it's coming up again.
Let me remind you that the situation is very different from what, for example, was the pound crisis in '92, where speculators could, for example, borrow money locally in pounds and then transfer it into euro currency, hoping that the pound will ultimately devalue. So this was basically a free one-way bet that was given to the pegging of the pound to the euro in the European monetary system. There's no such speculative option available right now, and that's important to understand. So speculators are unfortunately here not having a simple one-way bet. What they can do, which is very different, they can speculate against other speculators by, for example, going to the derivative markets, but that's basically their knowledge or their bet against another speculator's bet. So it's not a situation that in any way gets, I think, aggravated by speculation. On the contrary, you might easily argue that the fact that we have now well-functioning derivative markets for these instruments allows, for example, German banks to hedge their risk in having Greek government bonds and sell to the market the default risk. So in a way, the functioning of a deep, relatively deep market in credit default derivatives is something very beneficial and should be encouraged.
Do you have in your crystal ball a best case and a worst case scenario for the outcome of the Greek situation?
Best case scenario is probably what we got encouraging news about today, that Greece is able to refinance, roll over its debt, and make the fiscal adjustment that is needed, getting their deficit, primary deficits down to very low and reasonable levels, possibly below the Maastricht objective of 3% over the next, let's say, 3 or 4 years. That would be the positive scenario, and also that we have a lot of wage restraints and possibly even wage decreases in the medium run in the Greek economy, so that the Greek economy can pick up competitiveness. Negative scenario is sort of just the reverse. Maybe Greece can finance this bond issue, maybe the next, but ultimately it proves infeasible to do the required fiscal adjustment. There's no leadership on the part of Greek politicians, so that these plans stay dead letter. The commitments are not fulfilled in practice, so the fiscal deficit is not adjusting. In this case, you can bet for sure that the financial market will withdraw its confidence and not roll over the debt. Greece will be forced to a debt moratorium, possibly, and the European governments content itself with just limiting the ripple effects and the outfalls of Greek default for their own banking system. That, by turn, implies that we're going to have a severe crisis of Greece. We need probably a long-run recession in this case, much deeper. Maybe a lost decade could easily follow.
What impact on the euro?
Greece, I think, even in that situation, will be very unlikely to leave the euro, because that will basically destroy the banking sector, will trigger a whole bank run, which even in this situation the Greek government will not want to do. So these ideas of, I think, Greece actually leaving the euro seem pretty unrealistic to me. And that has been emphasized by Trichet as sort of a completely crazy plan. I mean, there's a lot of talk about it on the part of maybe also some financial market actors, but I don't think it's any realistic option. Not so much because it might not be really desirable to have a competitive devaluation. That would actually, from a macroeconomic point of view, be highly desirable. But just from a practical point of view, you cannot just go out of the euro, and just from a technocratic point of view, that's a very, very difficult thing to do, and would certainly create a bank run on the Greece bank. Everyone will try to move its euro to outside banks and so on. So I don't think we can, even in the bad scenario, imagine really Greece leaving the euro. But then the fact that it can't leave the euro means that there seem to be very little options in terms of becoming competitive again.
Thank you very much for being with us on INSEAD Knowledge.
Thank you very much.